Let's move on to the next management then. Kaynes Technology, the stock has surged close to around 180% in the past year. The company recently, Kaynes Semicon, which is a wholly owned subsidiary of Kaynes Technology, signed a binding technology provision agreement with ISO Technology. This deal will enable Kaynes Semicon to set up a center and supply chain for OSAT business in India. Discuss this and more, we have Mr. Jairam Sampath, the director and the CFO of the company, who joins us on the show. Hi, Mr. Sampath. Good morning, and congratulations on this signing that you've done. Tell us more about this, though. You've recently entered into the TPA with the ISO Technology for developing OSAT in India. Tell us about this long-term scaling up plans that you have about this. What kind of an opportunity does it present, and how much can Kaynes Technology's subsidiary garner from that?
Yeah, good morning, Nigel. Thank you for having me on the show. So this process started more than 6 months ago when we contemplated on setting up a semiconductor assembly unit in India. This is part of our long-term objective of becoming an integrated EMS player. So it's our belief that over time, the electronics footprint will shrink and a lot of components will get into a wafer form. And then, of course, companies which have ability to convert those wafers into a chip would have some value addition. And also, in the process of shrinking of this electronics, there will be micro miniaturization of circuitry, which leads to high density interconnection. And that's why we've also announced our project for high density interconnection PCB fabrication. In some sense, you can say in an approximate way, this is a backward integration. So we have tied up with this company. So this is the first step for the company as well as for the country, I think. We don't have too many OSAT facilities in India. So being the first step, we have tied up with a company which has necessary skills in the legacy packaging area too. And also they have some boutique customers. So this company is from Malaysia. The parent company of this ISO Tech is Lobtronics.
Sampath?
And after a lot of discussions...
Mr. Sampath?
Yes.
Mr. Sampath, most of these details with regard to this technology partner that you have tied up with, we have that. And congratulations on that. It's a step in the right direction, and it will help you all in backward integration, as you briefly mentioned. Give us a few data points. Okay, how much of money will you be investing? Point number one. By when do we see some kind of revenues coming out? If you could give us a brief asset turnover. And also some media reports suggest that the OSAT plant could be moving from Telangana to Gujarat. Clarify on that as well. Please go ahead.
No, absolutely, Nigel. Yeah. So thank you for kind of shortening my introduction there, and I can just get straight to the point now. In this entire semiconductor assembly business, the total currently we contemplate total capex of about 4,000 crores. Of course, this is supported by the government incentives, both central government, which is at 50% of the capex, and state governments is about 25% of its capex. Having said that, this is structured into a few phases. The original intent was to do 2 phases, wherein first phase will be we work with somebody like a partnership with ISO Tech, which is a subsidiary of Lobtronics, and we develop our capabilities in the legacy areas. And then, of course, we quickly transform the company into a little more advanced packaging and so on. Because our objective is that at the end of the capex implementation of 4,000 crores, we should also be, bulk of our business should come from advanced packaging areas. And that would make this entire business more viable, even if the government subsidies were to be withdrawn at a later date. Now, having said that, this is a business which is capex intensive. And the asset turns in this business hover around 1 to 1.5 times. And obviously, there are different types of semiconductors that you can package and different types of packaging. And we start with legacy packaging, which is a tad, let's say, lesser in terms of its margins. And then quickly we move on to advanced packaging, which are very high margin activities. And we expect that by FY26 second half, they start getting revenue streams at about 40% utilization. And by FY28, the phase 1, which is roughly between 1,000 and 1,500 crores of capex, would start yielding revenues at about 80% utilization. That will be somewhere around 1,500 crores of revenues in this semicon alone. And then by FY30, the second phase, subsequent phases will also come in. And then by that time, will probably the semicon revenues for the company will be about 4,000 crores. And we have been working to improve our prospects, especially in the advanced packaging areas. We started with ISOTech. And then later on, of course, we have tied up with a company called Upto, and then there's a Japanese company with whom we have.
Sure. So, Mr. Sampath, lots of details there. Let me just sort of go over it. What you're saying is that the investment going up to FY28 should be about 1,000 to 1,500 crores. And by FY28, you're hoping to do similar revenues with a scale up to 4,000 crores, if I got you right.
Yes, you're right.
Okay, so just also give us a sense, let's say at least by FY28, when the first amount of this revenue trickles in, what's the larger game plan? Because right now, the bulk of your revenue is coming in from automotive. Last quarter, aerospace was very good. You've been telling us that, aerospace is a huge area of opportunity as well. So how much will semiconductors chip in? What's the revenue mix that you will target over the next 3 years?
Yeah, so if you fast forward to FY28, I expect the new streams of business, which is semiconductor assembly as well as the PC board businesses, would probably account for more than 20-25% of our total revenues. Okay, this is based on our estimates for the EMS business. And being capital-intensive business, the growth in these businesses will not be as fast as the growth that you see in the EMS business. So we expect EMS businesses to still grow even in FY28 at 40-50%, and maybe these businesses will grow at 25-30% because these businesses will grow along with capacity augmentation, which we have to get our act together to make sure that we are able to invest into these businesses by, let's say, FY30. We should be able to generate cash, operating cash flows to justify investment back into this business, which we are thinking that is possible with all the steps that we have taken.
Got it. So your revenue potential, earlier you had spoken about a range of 1,500 to 2,000 crores in the next 3 to 4 years. Is that something you hold on to? And the two largest part of your businesses come from automotive, which is 30%, and industrials and EV, which is 44%. So will that continue to be the contribution going forward? Yeah,
going forward, see, FY24 is almost done. We have a couple of weeks left to complete FY24. In FY25, we expect slightly higher revenues in terms of proportions in the area of industrial, which is driven by smart meters, and also in the area of, that is, industrials and EV. We also expect railway signaling to contribute a tad more than what it has contributed in the past, that is FY24. And also in aerospace, outer space and strategic electronics also we expect significantly higher share. Also in the IT, especially high performance computing servers, we also expect. So essentially FY25 is going to be back to basics for us in terms of those areas which typically we have been doing well in the past up to years up to leaving FY23. And we get back our, let's say, due share of business in those areas which are more complex and lower volume and high margin businesses.
Okay. All right, Mr. Sampath, got it. Thank you for joining in. I look forward to a longer conversation about, the immediate business, the here and now, perhaps the next time. But semiconductors is definitely an interesting space for the market as well.